I do fuck up at times. As you can see, my last video, I blew up all my XFAs in like 2 days, which is insane. But that's because I completely neglected my risk. This go around, I bought 150K accounts, and I'm prioritizing risk way more. I was trying to learn how to add to my position, but I've decided that I'm going to stick to set it and forget it trades and keep everything simple, execute my same setup every single day, and whatever the outcome is, the outcome is. So that's my main focus and my main goal. Okay. Now, the challenging part, what are my challenges? What can stop me from reaching these goals? The main thing I could say, once again, is neglecting my risk, right? I've always been more of a greedy trader than a fearful trader. Like, I'm okay with adding to my winners and sizing up if I'm confident in a trade. And that has been my downfall as of lately. Like, the market's been a little bit tough, and that's not, and not to blame the market, it's me completely, but this is not the time to be doing such when I'm trying to aim for these goals. So my main challenge would be over leveraging. One thing that I hate is trading combines. I try to get them out the way as quickly as possible, and sometimes that quick, haste, urgent habit leaks over into the XFAs, leading to blown accounts. Okay, so it's very hard to turn that switch off when it's time to size down, when you go into like a sim funded environment instead of, evaluations. Now in this video, I'm going to do a quick trade recap. Last night with my fresh 150K accounts, I made $2,300. I did 2 trades. One was a winner, one was a loser, but the one that was a winner was amazing. I know I was going to do set it and forget it trades. I had every intention to, but the market gave me something that I just had to take, and it was completely risk-free, which taught me a lot. But anyway, let's jump into the charts. So the very first trade, if you look at any one of my videos, you'll see that I do the same fundamental thing: liquidity sweep or divergence, my entry model, 2R profit target, and my stop loss below the divergence or liquidity sweep, or the end of my entry model, or the end of the impulse candle. There you go. So as you can see, I had my entry model right there. That was valid. I went long, got stopped out because I didn't wait for the liquidity sweep or divergence. And it's very important to wait for liquidity sweeps or divergences because it allows smart money, or those market movers, to grab all the stop orders that they need, all the liquidity, all the capital that they need to move the market in the correct direction. And once I find that correct direction, I wait for my entry model. That gives me an opportunity to jump in while managing my risk properly, and then going for a 2R profit target or get stopped out. Either way. So as you can see here, I didn't wait for the liquidity sweep or the divergence. The long side was not the true direction, even though there was a confirmed uptrend right here, right? Like, that's an undeniable uptrend, but there was no liquidity sweep or divergence to let me know what the true direction was. So that's why a lot of traders end up becoming unsuccessful or blowing up accounts, or can never win a trade consistently, because they don't implement sweeps and divergences, and then finding out that the true direction was really the downside, as you can see. So looking at the second trade, as you can see, I have my opening range, included my divergence at this point. I did go to the 2-minute time frame, because whenever I lose on the 1 minute, which I normally trade, I try to go to a higher time frame to gain more clarity and more confirmation for the second trade to work out, to increase the probabilities of the second trade to work out. So we have the divergence and my entry model. I entered exactly where I got stopped out at, because I found the entry model almost immediately, right? And then I went for the 2R, which was right here. But since we were very close to low of day, or the bottom of the opening range, I went ahead and scaled out at low of day. But here was the thing. I scaled out before I found that my entry model actually formed in the correct direction again. My entry model formed again. So I added to my position. My stop loss, I moved it to the end of my model. I'm already in profit. This is a risk-free trade at this point. My stop loss is actually in profit, and I might as well give it a go. Like, it's completely risk-free. So I entered, added to my position, went for another 2R, and took full profits. And the biggest thing, there's 2 big things that I learned here. If I'm going to add to my position, it has to be in a risk-free opportunity, condition, and state, just like this. Like, it has to be risk-free. I got to already be in the green, right? And the second lesson is, do not allow risk to be the reason why you made a lot of money in the markets. allow the market to give you a lot of money. So catch the move. I'm most likely to use the 1 minute time frame for precise entries and tight stop losses, then jump to the 5 minute or even the 15-minute time frame for generous profit targets to see where the big market move is and run it up. So I hope you got something from this video, and I'll see you on the next one.